3 companies, 1 mission, revolutionize the skies. ACHR Aviation, Joby Aviation, and AIRO Group are each racing toward dominance in the electric air mobility industry. ACHR has major backing from Stellantis. Joby is working closely with the US military. And AIRO? They've just IPO'd and already generate real-world revenue across multiple aerospace verticals. So the question is, which of these 3 companies will ultimately lead the urban air mobility revolution? And more importantly, which stock presents the best investment opportunity today? Let's break down the numbers, the partnerships, and the long-term upside. This is AIRO versus ACHR versus Joby. Let's get into it. Welcome back to The Alternative Investor, where we dive into future-shaping companies, global economic shifts, and the best long-term opportunities for retail investors. If you enjoy deep dives and want a front-row seat to the next wave of innovation, be sure to hit subscribe, tap that notification bell, and grab your free Robinhood stock using the link in the description below. Let's start by getting to know the players. ACHR Aviation, trading under the ticker ACHR, is focused entirely on developing electric vertical takeoff and landing aircraft. Their goal is to revolutionize short-distance urban travel. ACHR has a significant partnership with global automaker Stellantis, which will help manufacture their aircraft at scale. The company is working closely with the FAA, targeting certification and commercial service by 2025. ACHR is currently valued around $1.5 billion. Joby Aviation, trading under the ticker Joby, is another eVTOL-focused company, but with a strong edge in government partnerships. Joby has contracts with the U.S. Department of Defense and is actively working with the U.S. Air Force to test and integrate its technology into military operations. Backed by major players like Toyota and Delta Airlines, Joby also aims to launch commercial flights in 2025. The company currently carries a market valuation near $3.5 billion. AIRO Group Holdings, trading under the ticker AIRO, is the newcomer, having just gone public in 2025. Unlike ACHR and Joby, AIRO is already generating real revenue from multiple business segments. These include military drones, avionics systems, certified flight training, and early-stage eVTOL development. AIRO's diversified business model spreads risk across several sectors, and the company is currently valued around $400 million. Let's dive into the numbers, starting with revenue and profitability. AIRO reported approximately $87 million in revenue in 2024, more than doubling from $43 million in 2023. The majority of this income comes from its Skywatch drone division, which serves both commercial and government contracts. While the company is not yet profitable, showing a $38 million net loss in 2024, it's worth noting that AIRO already has a gross margin of around 67%, indicating strong efficiency and potential scalability. Joby, in contrast, is still in the pre-revenue phase. The company generated just over $1 million in revenue last year, mostly from Department of Defense contracts. However, their quarterly burn rate is well over $100 million, and they're investing aggressively in R&D and FAA certification. ACHR is in a similar boat. They have not yet generated meaningful revenue and are burning capital at a fast pace. Their partnership with Stellantis helps offset some of that risk, but the company remains pre-commercial as of now. The takeaway? AIRO has diversified revenue streams in place today, while Joby and ACHR are still banking on future success. AIRO's business model is built on diversification. It generates revenue through drone technology, avionics systems, flight training programs, and emerging eVTOL capabilities. This means AIRO isn't relying solely on one industry or product launch. It has multiple income streams and customer bases. In contrast, both ACHR and Joby are pure-play eVTOL companies. That means their entire business models are tied to the success of vertical air mobility, including FAA approvals, infrastructure, regulatory changes, and consumer adoption. If those factors are delayed, revenue is delayed too. From a risk management perspective, AIRO's diversification offers more downside protection. But for investors chasing massive upside, pure-play bets like ACHR and Joby offer concentrated potential, with higher risk. Government contracts can be a huge factor in early-stage aerospace and defense companies. Joby stands out here with strong ties to the U.S. Department of Defense. They've secured military contracts for testing, research, and potential deployment of their eVTOL technology. They're also actively operating on military bases, giving them invaluable real-world data and credibility. AIRO also has notable government connections. Their drone division serves U.S. military clients, and their flight training operations are certified by the FAA and international aviation authorities. While they're not as far along in eVTOL development, AIRO is already integrated into critical defense infrastructure. ACHR is more commercially focused. Their strategy revolves around urban transit and partnerships with private companies and auto manufacturers. While this opens up consumer opportunities, it lacks the fallback of government support in the near term. ACHR and Joby have already caught fire on Reddit and FinTwit, making them favorites among speculative traders. Both have enjoyed media buzz and bullish projections from early investors and influencers. However, that popularity has also inflated their valuations relative to revenue. AIRO, by contrast, is still flying under the radar. It has very little analyst coverage, minimal institutional ownership, and low retail exposure. But that's often where long-term opportunities begin. If the market turns speculative again, AIRO could benefit from increased visibility. It's a classic underdog scenario. Joby and ACHR are frontrunners in attention, while AIRO may have more room to surprise. So, who wins the sky race? If you're looking for a company with revenue on the books, diversified income streams, and real government ties, AIRO might be the safest long-term hold with reasonable upside. If you're willing to bet on high-risk, high-reward moonshots, Joby could be the most exciting, especially with its deep military involvement and strong brand backing. And if you're betting on urban air mobility becoming mainstream fast, ACHR's partnership with Stellantis gives them the scalability to potentially dominate the commercial side. But here's the real answer. It depends on your strategy. Diversified investor? AIRO might be your pick. Speculative trader? You might lean Joby or ACHR. Let me know in the comments. Which of these three stocks are you watching or buying right now? If you like this deep dive, give it a like to support the channel. Subscribe for more investing insights into future-forward tech. And don't forget, grab your free stock with the Robinhood link in the description. I'm Robert, and this is The Alternative Investor. Thanks for watching, and I'll see you in the next one.